The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days, 11 o'clock till noon at 877-927-6648. Great shows today, and we've got a full lineup. I mean, we had John Logan, great show. Larry Pesavento, wonderful show. Tom O'Brien and Tommy, just a really intriguing show. They talked about the whole thing. Tom explained the whole thing about the three crows. I mean, this is just what an education you got. I'll try to do my best here. Dow's up 117 at 17,837. S&P is up 12 at 2093. You've got gold down 60 cents at 1065. Oh, it's fascinating, this whole thing going on. Silver's down 5 cents at 1405. Platinum's up 7 at 839. High-grade copper's actually above 2 again. It's at 207.20. You've got crude oil down at 41. You've got bonds up oh my goodness, look at that. The TLT's up 122.43, up 98 cents. Bonds are up $1 and 1.21, 30 seconds. You got the dollar down 24 at 99.97. There's just so much to go through. Let me just show you a couple of things here. I'm going to do this right now. This is the 120-minute chart of the E-minis. Make it nice and big. See this cup formation? See the candle that's forming here? The candle hasn't completed because it's got another 20 minutes to go. It's a 2-hour candle. Looks like a Roman candle right now near the top. That means that it needs to close near the high. This Chapman wave inside wedge target line needs to become an appropriate magnet and then a repellent, but it needs to try to get back instead of 2090 sliding right now a little further. And I'll show you why I'm talking about the slide. Let me show you the 10-minute chart. 10-minute chart had that, it's almost like a single leg A spike that occurred right at just, it started at 9 o'clock really, but it was 9:30 that the real spike acceleration to the upside unfolded, going to 20, 97, 25 in the December E-mini contract. Now it's pulling back out, a very sharp pullback and quite a good rally, but all of this is part of the gyrations that you expect going into the last month of the year. This is where portfolio managers are absolutely attempting to readjust and make certain, to meet certain requirements, as well as to fulfill some of their personal obligations to get into more of a particular stock or area or to get out of. So this is what we expect, a very choppy period, certainly a choppy week. I'm going to go into this in a little bit more detail. I want to just show you something else that I show. Personally, I'm trying to stop trading the very short term, going from ping pong to tennis, from the 2-minute charts to the 10-minute charts. I find it just, at this particular point, I've done all the homework for a long time. Obviously I've done the homework for years and years and years. But at the same time, I'm trying my very best to try to stay in trades, personal trades, a longer time. Because if the technique applies to one time frame, it should apply equally to another, and I'm finding that's absolutely true. So here we've got the 2-minute chart. Here's the Dow futures E-mini December went to a peak D from that low right there. It goes up to the top of 17,877, plunges, literally plunges, gives it all back plus, and it goes right down to 17,752. I mean that's quite a move, right? 17,000, the futures go from 17,877 to 17,756. And what do they do? They go screaming back up again to the 17,843 level, and now they're at 17,821. But look, the E-minis, now I could have given this a Chapman wave phantom peak right there. I'm trying my best to avoid as many phantom peaks. I've actually found now that even in the very short term, I actually go back to wanting peaks the strict way that I did it on the CD. So I'm looking at this, I'm saying, I think that there's still internal strength at this particular point. And for my subscribers to my opening call, I've absolutely been trying to keep us on the right track. We've been going long, we've long indexes, we've got a lot of long stocks. We actually have short stocks as well. I should say short stocks. And one in particular, I don't know if I should even talk about it. No, I'm not going to talk about it now. It's just a great example of something, but you know what? I'm not superstitious, but I do get a little nervous when I start talking about things, because when you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. So here we go. Let me show you a couple of very interesting things here. The fact that we keep rallying, and that in December, let me just go to the Dow chart. In December, we need to see this week, in fact, a push above 17,914.34. We're all the way to 17,892, just 23 points away from breaking to leg B. I think we're going to do it. But thinking and doing are two different things. Why? Because you need this MACD, the moving average convergence divergence, which flatten out. A flat MACD, if you remember my CD, I talk about a flat D. It essentially maintains the previous trend. That means we've got the up signal here. And that previous trend remains in place until you get an expansion of the beta or the theta between the faster moving average, in this case, the green line and the red line. I want to see a nice expansion, and that will give you the trend. And the trend I would like to see would be up. And there are a couple of reasons for that, because the stochastic's holding so steady at 82%, that is a good sign. So that's on the Dow Daily. But there's something else I want you to talk about here. The dollar. I've spoken about the dollar now for 2 weeks, and I've been saying the dollar, in fact, the dollar, when you think about it for 2 weeks, all the dollar's done is gone from 99.85. Let me just double check. That's the one we're looking at right there, from the 23rd of November. 100 was the high. So we've gone, big deal, from 100 to 100.31. Now you tell me, is that bull market activity? Or is that starting to struggle to make the arch roll over? Well, unless the Dow in the next 3 days is able to get to 100.75, I really think it needs 101 point something, 101 point anything. That's what it really needs. Because if it can get that, then all of a sudden you're saying, you know what? That breakout in the weekly above the left side, let me do this, above the left side, a high of 100.39, and today we've gone to a high of 100.26. Yesterday we went to a high of 100.31. 9 cents away from breaking to a new recovery high. And the monthly chart, that would start leg C. I don't think we're going to, at this particular point, break strongly to the upside in the dollar just yet. I'm thinking out loud, remember, because the MACD is at 95% in the weekly. Sorry, the MACD is very strong, and the stochastics at 95%. So I'm still thinking that I have to keep in place the 1 foot on the accelerator, 1 foot on the brake in terms of the dollar. Why? Because the dollar stochastic in the daily is at 86%, but look at the way the MACD is starting to fail. From the high that was made at 99.85 on the 18th of November, to now, where the dollar yesterday went to another recovery high. Look what's happened. The MACD is starting to fail. Stochastic's lower than it was then, but it's still very good at 86%. So I'm looking at this and I'm saying, okay, I've got enough emails and enough calls, and people are just asking and dying to get into the gold, We once again grabbed a very tiny gold share and nibbled on it because I just want to be there if something's going to happen. Nice. Yeah, we got it in at 2. Let's call it, I'm not going to tell you where the decimals are. Let's call it 208. It hit 200 and, let me just double check where it went. It hit 217. I mean, tell me that's 9 cents. That's a huge 9%. That's 2%. That's a very nice rally. No, it's even higher than that on a percentage basis. So now it's at 212. So if you're looking at playing the gold, and I do mean playing it, because you can't tell me unless you've got a cycle work low. And to me, let me show you something here. Cycle work, I don't have a cycle work low. I can say that from that kind of doji, not even a doji candle, I wouldn't count it. That's not fair. But I will say 1, 2, 3, 4, 5, 6, 7, 8. I would have taken that as something to watch. Or the low bar, it's called a 10. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, about 10. Yeah. No, I'm not going to make up things. In the arch formation in the Chapman wave, it's sometimes very difficult when you're coming down in that dreaded H pattern, the lowercase h pattern, to get a left side, right side price time match. It works in the bigger picture from the ups. When you've made a high, you're making that right shoulder failure pattern up at the top. Sometimes you can get a perfect left side, right side, or a larger arch. When it's a short one like this, look, this one here worked almost perfectly. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8. So it missed it by a day. And it didn't take out the 1134 low. I went from the low of the 20th of November to the high of the 23rd of January of 2015 to the low that was made before the bounce on the 20th of March. So this is a weekly chart. And but it's not always that easy to do. Look, the high that was made at peaks. Actually, I shouldn't say that. I do it often enough that maybe it is. 1, 2, 3, 4, 5, 6, 7, 8, 9. So again, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh, no, I'm going to take that all back. I just want you to make sure that what I was saying was something that people who are not that familiar with the Chapman wave can actually latch onto. So in this case, it was much shorter because you went to that peak B in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 sessions. And in 1, 2, 3, 4, 5, on the fifth session, you're already plunging below the 1072.50 low of the 24th of July. So they're getting quicker and quicker to the downside. So I wanted to say I don't have a cycle, a rhythm to the cycle. And even if I take that low there to there, and then that low, it comes in here. Now, I'm just not getting it in the daily and weekly charts. In the monthly, I've already extended, the gold contract is already extended. So let me do this for you. We'll do it live right now. I'm going to go from here. I should go to the top, but I'm not. I'm going to go to the exact low there. And extend it to the right. So this is what I'm doing. I'm going to the low that was made in October of 2008 at 739s. This is a continuous contract, so you might have a different. I'm calling the low of October 2008 the low. And now I'm going to go left, and I'm making it green because that was a rally. Now I'm going to go to the downside. And this is a new parallel. I'll do a little more work during the break. I'm trying to get a cycle low. That's all I'm trying to do. So there we go. Oh, look at that. It takes you to February of 2016. But I would have to say, I want to talk more about this when we get back. I'll be back, Basil. Don't forget, I've got a workshop coming up on the 10th. I'll talk about that.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We'll get you some of the emails coming up right now. Let's see, double checking. So gold, let's put it this way. You've got one commodity that's really leading the pack. And I'm looking at potential reversals, but all we do is we get the little choppiness of a spike to the upside and then a failure pattern in almost all the commodities that we've been looking at. And gold is the same thing. It cannot break and hold above the 9-period moving average, and it seems very difficult to do. Today was the opportunity for it to do. Why? Because the dollar is making a peak D, and that makes it very important because it's a peak D. And D with a failing MACD and the stochastic still holding well tells you that there's still internal strength, and that if the dollar really breaks at 99.92 down 25 cents at this particular point, it would take a 3 out of 5 closes under the 9-period exponential moving average to really say I've got some kind of a sell signal, and the stochastic would have to be at 76%, not 86%. And then I'd say, okay, dollar on a short-term basis, getting a sell signal. Now gold can have a 10-day to 2-week rally before we see whether the dollar makes a peak C and then tries for a leg D on the upside. I mean, a lot of things are going on, but the currency of gold is the currency of fear. The dollar is the currency of happiness. The dollar is the currency of, what can I say? Currency of stability. There you are. Currency of stability. And therefore, the lead dog right now is the dollar, even if the others have a little bit of a bounce. So I just wanted to get the relationship out, but I still have a target of 9, whatever it was, 9 something or other based on the 200 period exponential moving average. I'll give you the exact figure now in the monthly chart. And that to me, we were very close. It's at 1,028. And all I can say is we're 40 points away. You can do 40 points in an eye blink. And at that point, I start to become interested in saying, now, how does the dollar act bouncing up and down around the 200 period exponential moving average? Kind of that's the way I want to look at it. All right. Now let's get back to our story. Email. Hi, Basil. Top of the morning to you. Long time. How are you? Could you do a rundown of the SMH on the show today or tomorrow? I'm long at 54.27. Whoa, bravo to you. Who is, let me just see, SMHs. 56.28, you're up too, very nicely. Thank you. Regards and happy holidays, Will. I wonder if it's Will from down in, I think, New Orleans, and this Louisiana, Will. Will, good to hear from you. So let's do this. And I'm actually very embarrassed for my subscribers. We actually were long the SOXX, 300% long, because we made a fortune on the short side, the SOXS. So we're trying to get back in, and I missed it by 9 cents just the other day at 80. I can't. Have I ever typed it in yet? SOX. Oh, I didn't type it in yet. I always type it on the chart so that it's right there forever. Let me just double check. 3%. 89.20. 89.20. We bought it at 89. Yeah, or whatever it is. I'm just sorry. I'm just going through my notes here. Whoa. So we didn't. But I thought, wait a minute, give me a second here. Wait to buy. God, this waiting is terrible. SOX. Yeah, so we just barely missed it, and now look where it is. It's at 92.71. So here's the SMHs, and it's really, I'm pleased you brought this up, because I showed my subscribers, I think maybe even this morning, to my opening call. Look, there's a cup formation. Here is the pattern that we always look at. We look at what I call the drop bucket. It is a straight move up. Then you start from a D, E, or F. You start a cup formation, and then the technical starts to rally strongly, and you get like a buy signal. I've actually got a buy mode based on everything I'm looking at here, 92%, and the MACD very strong in this. That's why I even tried today to get it, and we missed it. So far, we've missed it. Days young. So we wanted to go the 300% long, but we haven't got it. So it's one of the indexes that I like, and I've got it in a buy mode, which says, and this is a little, normally I just put a plus sign saying you've got to see how it acts. I think this is acting beautifully, and my suspicion is that somehow or other it will work its way from 56.28 to the 57. Look, we made it in a shorter time period than the left side, right side price time match. It should have gone to the 7th of December is to make 56.36 to retest the left side high. Instead of done it in the cup formation, it's very positive. But this is not the point. The reason why I wanted it is I thought it would break the falling Chapman wave falling axe in leg C. Hey, I think I better go to my CD to talk about these. And don't forget, I got a webinar coming up. Let me just do this as we go to the break. All right, I'll do it when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just show you this. This is Elliott Wave 5. This is I'm going to make it the number 5. It should be V for 5, Roman 5. This is the 5th. If I'm correct, that there's a chance that we're in the 5th wave. The 5th wave doesn't tell you where it's going to stop. Well, there are measurements, a whole bunch of things. But I'm putting it together with the Chapman Wave methodology on the 10th of December for subscribers. Besides the fact, we talk about how we can possibly be trading it. We've already started trading as if there's a potential for this. And what would be weak going into the 2016 first quarter. So this is for subscribers of my opening call newsletter. So sign up for a free trial to attend. I really think that this is probably because there's so much evidence that despite all the negative backdrops, the market keeps going higher, that things together, especially for my subscribers, they know what I sent out, the 3 charts I sent out today based on the the world's tallest building. It's the world's tallest tower, actually. And then those 2 charts that I sent, two pictures that I sent out with details explaining about this to me is very important, what's going on in Manhattan. I'm going to be discussing all those things. What's the relationship to where we are? Just a whole bunch of things going on. So that's going to be, you can sign up now. You can start getting my newsletter. I recommend it. If you're really interested in the relationship of different robust methodologies, how you can try to piece these things together, that's number 1. Number 2, regardless of that, there's this whole, what I call trends watch section that I've done all my life just about, where I look at trends always a little early, because you want to be there early. So that's very important. Another thing is that I will be giving I was invited to give a talk on the Wednesday night before at the Boston Investors Group over at MIT. That's where it meets. And that's the night before. Of course, I will not be doing, I'll be doing many other things. I'll be talking about, whatever is asked and whatever I want to be talking about. But the specificity of Thursday night is really for subscribers. It's really the nitty-gritties of where we are. And in this most dismissed, I'm not going to say hated, but most dismissed mega bull market we've ever had. It's just it's an incredible thing what's going on. So here we go. Let's go back to the SMHs. So this is for Will, and a whole bunch of people said, "Is that Will from Shreveport, Louisiana?" And I said, "I'm not sure it is, but it could well be. I hope it is. I will. We all send regards." So let's do this. In this particular top, you see, there's a technique in the Chapman wave methodology called. Let me just see if I can hit this right here. There we go. This is called the drop bucket. I always like to give these things nicknames. What is a drop bucket? It's a double top. It is the inversion of the lowercase h, right? You've got the dreaded h. This is the drop bucket, the exact, like a mirror image. And what does it do? It says that you've had a tremendous move to the upside. You've gone to a D, E, or F, and then you've made a cup formation and you've retested just under, exactly on, or just above the previous left side high. Now, sometimes in this particular pattern, you can actually close once, maybe twice even above, but not very much higher than the left side high. If you start to come back and you take out more than 1/3 to a half of the distance between the bottom of the bucket, of the cup, let's say, and the top, the lip, then you can expect that you're going to retest the base. If you take that base out decisively, be ready for a one-to-one to the downside and then an expansion. All right? So here we are. What we're looking at is, let me put this in. Let me see if I can go down one. There's another one. If you're putting it together with the MACD and the slow stochastic, that's a formidable pattern. All right? So what do we have? You see, you've got the MACD turning down. You've got the stochastic much lower than it was at peak D. So if I did a vertical line there and a vertical line there, you'd see a huge discrepancy in the technicals. Do we have that in the SMHs? Well, we have the exact opposite. We had a peak E, a proper peak E, with there's that little right shoulder failure that's right there. And you start to come down, and you make almost a one-to-one to the downside, trough A, B, C, D, which I could also type in as look A to B. This is the classic TFNN, A to B equals C to D. All right? And it went even lower. So that's an expansion. It's almost like a little butterfly pattern there. So what we're looking at here is that this is a brand new move to the upside. And I've given it blue A and blue B. Why? Because the stochastic is at 92%, the MACD is still climbing. So the MACD is still climbing, the on-balance volume is joined in, and there's a unity to this that says the power of the move to the upside, just right now, is strong enough to think that there's a chance of still making a C to a D. How does that fit in? So this is the SMH. So, Will, congratulations on your entry point. I would do this. If it's a short-term trade, I'd make absolutely sure that at 54.47, say a 20-cent gain, a minor gain, that would be my stop no matter what happened. But if there's a close between today and Thursday, a close above 53.36, I'm going to suggest to you that unlike the 120-minute chart, which is just, the 120-minute chart, which has got 1921, 74, 77, which is only at peak C or leg C right now, I think we're going higher. And if we are going to go high, if I'm correct, and the MACD and the stochastic of the weekly chart, let me move this away just for now, the 120-minute chart, let me move it away. The monthly chart, like most of the monthly charts, needs a lot of work. This is going to take a lot of work to get back to positive. Okay, and that's exactly the kind of thing I'm going to tie together in that workshop next week, because because it's very important to tie a whole bunch of very important aspects. This is part of the economy, the semiconductor area. So I'm putting this together by saying that I'm looking at this and I believe this is only leg B. I could call it E going F/B right now. And technically I would normally do, but I've got the up arrow because the MACD is so much above 80%. So I keep saying the MACD. The stochastic is so much. I like what I'm seeing. I like it. That's the reason why we've been trying to go long rather than short, which is normally what we do with the stocks. So this is going to be very important. I like it. I like the V-shaped pattern that it's a cup pattern that made the right side almost like a straight line move, going to the new recovery high. And it's only a recovery high. Remember, the all-time high was 60.13. Let me just double check on that. Yeah, 60.13 back in June of 2015. So I do like it. And I had a question in the den, is this the time to short? This is exactly where you'd be thinking of shorting. I just don't see it as a short right now. I see the weight of evidence. To be short, I'd want the stochastic to be only at 82%. I want it very quickly to go within 3 bars of the breakout, back way under 80%. I just don't know how it's going to do that unless it's a massive sell-off by the end of the day into tomorrow, like a 400-point sell-off, and then you will absolutely get the SMHs down much further. So I hope I answered that question a little elaborately, I'm afraid, but I wanted to do it because it shows you patterns that coincide with what we're looking at all the time. So now the next question is, take a look at CMG. Basil, the question I have about SMH is, have we started a new buy mode in the monthly? I can only say to you that I've got a buy mode in the weekly. And the weekly says we should go C, and this is a very telling thing because it suggests, based on the work I'm doing right now, that it doesn't say how high, it just says higher, that the SMHs are moving higher in such a way that they should go higher into that week that the Fed is talking. This is going to be real tricky. Because if I'm wrong, you'll fail at a peak C probably and start to come down. You're going to have to go all next week without a new high to make a peak C. So this, what I'm saying is that I can't do the monthly. I can only go step by step. Daily buy mode, I believe. Weekly buy mode, I believe. There's nothing here that says at this point that I'm wrong, technically based on the Chapman Wave methodology. Price will tell me. At 56.17, a close under 53.5 says, hey, mister, you missed this very badly. That's what it says. So it's a 3-point pullback. So, okay. I hope I helped there. Next question I had was CMG. And CMG, oh, wait, I've got a couple of emails. Oh, let's just do this first. CMG, yeah, I think it's a hat-trick top. I think the Chipotle Mexican Grill has made a very serious peak. And I don't think it's going back to the all-time high of 758.61 with a round number low of 685 that month of August. I think this is a lot more serious for CMG. And that's just the way I'm looking at it. So would I short it? I really would like it to move a little higher. I'd like it to get more into the very ugly gap down low of, oops, mouse, change mice. Yeah, I would like it to go to, the high was 614.70 on the 20th of that bar, and it slumped all the way to 534. So I'd like it to get just maybe 593, 96. Give me a text or an email or in the den. Just ask about CMGs at the time. To short now is great because you could still get a pretty decent pullback to the 532. I just need to see it go a little higher. I want to see that the stochastic and MACD completes a little bit more of a move to the upside with price. So just this is a risk reward I'm looking at. Next question was Avagio, AVGO. Wow, nice. I used to have this so nicely notated. Let's see if I can do it now. So this is only A, B in the weekly. I don't know what that is in the monthly. I remember it very well. I remember the chart pattern. I just can't remember the lettering. So this went A, B, C. I'd like, if anyone wants to email me who's done the Chapman Wave and gets a little frustrated at how many times off a major move off a low can take you to a peak C, especially if you get the Chapman Wave squash, and then either it takes a long time to get to the D or it could fail. And if it's happened to you, I'd like to know, because I'm doing a lot of work now on the success rate of the failure pattern. That is, when it finally does make the move, that move should equal vertically what you're seeing horizontally. I don't know how to explain that. Vertically as you're seeing horizontal. Well, I'll try to do that maybe Technical Friday. 129.84, 129.79. So this is D, leg D right now, but it's a lovely cup formation. So I like it. I would just say if you're long, 128.20 is the 9-period moving average. And everything about this right now, no, I'm going to do this. This is the one change I've made to my CD program. I believe I spoke about it, or at least I spoke about it very soon afterwards in my shows. This peak C1, C2, that's a formidable thing. I just cannot dismiss it. So this is a D/new A. Put a D if you say D. Don't type in an A, an E. There you are. So yes, Avago Technologies moving very nicely. I like the action. I like the MACD. It's just screaming higher with a green line, fast moving average, 9-period differential, really showing tremendous strength, and the stochastics at 95%. In the break, if I do get a chance, maybe tonight I'll do it. I'll put it over here, and I'll do it tonight, and tomorrow we'll look at it with a notation in the monthly. So here's a question: will Avago Technologies make a leg C in a new buy signal that could go to a buy mode at 134.96? That the high of, oops, sneeze. Excuse me. All right. So I'll try to deal with that. Meantime, it's acting very well. And the 128 to 126 areas key support. If it takes it out and starts to close lower, you've got the H that goes to an M pattern in the weekly. At this particular point, the way the MACD and stochastic are rallying, this is very good. So I hope that helps you there. Now, so you remember that peak D I said that we got in the 2-minute chart of the Dow futures at 17,843. Well, we're still going sideways from that. And I love this pattern. I'm now calling it the Cobra pattern. I've spoken about it for years. I always talk about a little snake type move in a tiny channel that takes a lot of time and a lot of bars, but goes nowhere. Each bar is almost the same length, and it goes from the top to the bottom to the top to the bottom of the down channel, and then it breaks out. There's that pattern, a little breakout pattern. That's a positive. And then that level of resistance becomes a level of support. Look at this right there. So we're going to be watching this really close. As I say, I feel very strongly that my bias is towards the upside. I am watching the gold stocks very closely. Gold's only up 13, GLD's only up 13 cents. But the gold, not all. I named 3. There may be 4 or 5 out of all the gold stocks that I follow that were looking really good. The one that we bought this morning, which is up 2.8 cents. 8 cents. Up 4%. Nah, come on. I'll check out in a moment what it's up. I mean, that's like telling me that maybe dollar is just starting to bump into resistance. I'll be back. Basil Chapman. Yeah, the Dow's up 106. The S&P's up 12. And I'll be back with a couple more questions. I'll try to deal with those as well.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
This is something I wanted to do. My Dow Quartet. GE, not good. It's only up a penny at $29.95. Made a peak at 30.99 on the 20th of November. Has been pulling back. And that usually says that the market is going to be pulling back very soon. So I'm looking at it, but I'm only at peak C. In the weekly, and the technicals are 95%, and the stochastic MACD is huge. But I've got to watch it closely. And that breakout in the monthly at G/A is just an incredible thing to look at. Because if it's A, it means we're going in to much higher highs all the way through into 2016. But you can't just use one example for something like that. Here's the other thing. IBM, which I've been favoring for 3 weeks now, is doing really nicely. I love the breakouts. In leg C, it's at 140.32, up 91 cents. But the monthly chart is horrible. But it is tested close to testing, did get close to testing the 200 EMA. And the weekly chart has got a nice candle. So this IBM might give a little bit of a heads up to say that the high-tech sector, the oldies of the high-tech sector are still in play. So here comes Triple M. Looks with that H pattern. Remember the H pattern we spoke about, the dreaded H pattern? That's chapter, I should know these by memory, chapter 17. Yeah, chapter 17. Chapter 17, that's the exact opposite of the drop bucket, the double top. This is the one that keeps coming down, coming down. Well, that H pattern is quite formidable. You've got to be looking at it, and that's the H pattern that we can see right there in Triple M. better find some support real quickly. Should have been participating today, but wait a minute. UTX, geez, my Dow short-term indicator. UTX is more my intermediate term, and as an intermediate term, it's saying the rally that we had was pretty good, going all the way from the 86 area to 101. That's huge. It's almost like a year's worth of work. But the pullback has been unbelievable from 124 down to the 86s. So this is a very important moment for UTX. So it's very selective. I was asked about the IYR, and the IYR is rallying here. It's holding very nicely within a containment area. That is the REITs, iShares, Dow Jones REITs. Remember, I've been talking about the biotechs as being, I couldn't even tell you the number of emails I get showing the new buildings. I drove around, my wife and I were down in the Cambridge area, the Kendall Square, Cambridge area, just recently at MIT. I have to tell you, the buildings are unbelievable, and they're all biotechs. This is just a major top as far as I'm concerned. Very quiet. We'll see, I mean, if I'm right or wrong. But that IBB is already suffering because it's down 71 cents today at 333. So now, let me just do this again before we wrap up. The Dow, I think, is acting really well. Today's action is good action. The day is young, and I think that it's a real mixed market right here with some fund managers getting out, getting in. Let me just do this, a couple of things to show you. The Dow INDU, what we're looking at here is that we needed 17,915 to start leg B. We haven't got it. It's taken too much time. I don't like things taking too much time, but you know, my contention is that rectangle formations take a lot longer than your patience. It can last a lot longer than your patience. And look at this 120-minute chart from the 19th of November to now. We're just stuck in a range. That can be very frustrating, but in the range, you've seen some areas get clobbered and other areas acting very, very well. So let me make this real clear. At this particular time, we still remain long the Dow, long other indices. We're trying to grab some others. And my bias is not to forget about the short side. We added a short this morning, but to be very selective. And index-wise, I want to be participating in any up move to the upside. We got Brent and Martinez. You want to look at Brent what? As we're going out. SLCA, maybe Brent didn't hold on. SL acting very well. It's a 21. You want to see that it holds 38 to 20. Make sure that that's an area that you watch carefully. It's acting quite well right now. Folks, I'll be back with Tom O'Brien later today. Thanks for being here. Check out my webinar coming up on the 10th, and I'll be right.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.